The numbers are in, and even with the extreme rise in interest rates that we've seen, average sales prices are on the incline. Let's talk about that and more in this week's segment of Market Watch. Hi everyone, it's Joshua Barks, Associate Broker with Keller Williams Realty Boise and Team Lead of the Barks & Co. Real Estate Team. Thank you so much for tuning in to this week's segment of Market Watch. We are talking about the market dynamics. So we're going to go into our deep dive this week. Because it's our longer video, we will have the little chapters. If you want to drag to the sections that are pertinent to you, you're welcome to. But before we get everything kicked off, I do want to just cover some bullet points for you so you could get kind of the gist of what's going on. So first off, we have more listings than we've had all year for both Ada and Canyon County, which is fantastic. It's still, for both Ada and Canyon County, half of the amount that we have pending. So we have, say, 600 pending in Ada County, but only 300 active. That's a pretty close, rough estimate of the numbers. We'll get into the real numbers here in a bit, but that's kind of what we're seeing. Way more demand than what we have available. And then number two, interest rates, they have come up 1.5% in just 3 months, which is the fastest pace of the fastest pace change that we've seen in interest rates since 1994. Yeah, that's absolutely insane. Interest rates are now hovering at just under 4.75 for the 30-year fixed. Bullet point number 3, in both Ada and Canyon County, our average sales prices are up by more than 2%. They are, however, appreciating slower, as we expected, than what we saw this same time last year for both Ada and Canyon County. We are expecting, because of supply versus demand, even with the rise of interest rates, we are expecting prices to continue to rise at least through the end of the year. Not by any significant means like we've seen over the last couple of years. However, they are going to continue to rise very likely. Days on market is also increasing, which is wonderful. We need that to happen. And so what you'll see kind of going forward, what we're feeling right now as well, is listings are just taking a little bit longer for buyers to snatch them up and buy them, which is great because now people are able to move at a better pace rather than rush all of the time. Now, that's not the situation for every single listing out there, and it depends on what price point you're in, but that's kind of the gist. There's a little bit less competition because of the rising interest rates. Yes, that will take away some of the demand that we have out there, but it doesn't look like, at least yet, that it's taking away enough demand to get rid of competing offers altogether. Let's dive into the market dynamics for March, everything that took place in March 2022, and you'll see that compared to 2021. Here it is. Here are the March 2022 market dynamics for Ada and Canyon County existing home sales, so not talking about new construction today. As always, let's start with Ada County. So this is the overall, this is the market dynamics that we put together every month. As always, let's start with the market trends chart and then dive into the average sold price historical before we go into the pricing breakdown and talk about absorption rates. So, market trends. When we're looking at the red line here on both of these charts, the red line constitutes the active listings. So these are the available homes that are for sale on the market, ready for someone to buy them right now. The gray bars on these charts are the number of pending sales. So that's how many homes are currently in escrow, under contract, buyers bought them. And then the black bars are the ones that actually closed. So those are the closed sales. So buyers took them off the market, they're waiting to close, and then when they officially close. As you can see, we are up in inventory, but barely month over month. We started the month with 323 active listings, and now we're at 327, which is technically more than what we started. And yes, we are still on an upward trend, not just here, but when I'm looking at the week over week numbers, we're still on an upward trajectory to have more active listings on the market, but still not nearly enough. As you can see, 327 active is more than what we had last year, 223 at this time, but it's significantly less than what we had March of 2020. And as you'll remember, March of 2020 is when the lockdowns happened in our area. But this 683 active listings is kind of a holdover of what we had going into March, right before the lockdowns. So you can kind of see we had more than double what we have now, right when the pandemic started, when we knew that the market was hot. And then it just went absolutely bonkers because we didn't have any homes for sale and so many people trying to move. Now, 888 active listings is what we saw last year. That was our peak for the most amount of inventory that we had for the year in 2021. And we only had 720 as the peak in 2020. But this 327 is significantly below that. When we're looking at the number of pending sales, we have 628 pending right now, and then we have 576 closed. Both of those, both pending and sales, are up for this year compared to last year. So we only had 588 pending this time last year and 555 homes sold last March. Now, a big part of the reason why we have more sales now than we had last year and more pending now than we had last year is likely due to the fact that we have slightly more homes than what we had at this time last year, rather than demand actually being an increase because inventory is just so tight. When we're looking at, last year compared to last March, obviously we didn't have very many sales and demand kind of cooled because everyone was just kind of staying in place for a little bit before it really kicked off in 2020. Now, when you're looking at the pending sales, 628 pending compared to 327 available, that's a significant jump. So people that are saying, prices are coming down, the market is slowing down. Yes, the market is slowing down, but prices are not coming down, not in the way people are making it sound, because we only have 327 active listings and 628 pending. We're going to need pending to look more like this: 586 pending, 683 active. And that would still be a tight market comparatively, at least pre-pandemic that was. So that's what we're expecting later on. We still need more listings on the market. Now, my projection for listings in Ada County is we're likely going to see more listings come on and see the most listings this year in the summertime, just because that's usually what we see in a normal market, at least over the last 5 years, where we've had the most amount of inventory in the summer months. Of course, we're excluding 2020 because that was a different year. And 2021, we were starting to get back to normal and we peaked in late summer, early fall. Hopefully we peak a little bit sooner this year and get back to more of our normal trend where we peak in the summertime with the most amount of available listings and then go down again in the holiday season and then start ticking back up in the springtime. Now, talking about prices, we've come up 2.3% so far year to date. Our now average sales price over the last 12 months is $588,000 for Ada County existing homes. We started the year at $575, and now we're at $588. And yeah, we saw a 35% increase last year. So far, that 2.3%, it's less than half of what we saw this time last year, which is very much in line with my prediction and what we were expecting to see, what we are expecting to see this year. So the 2.3%, I do still anticipate we're going to see this average sales price increase to the 5% marker by summertime. And I think we're going to end the year probably somewhere between this 11.5% and 18% that we saw between 2019 2020, just because we don't have the inventory and the demand is still there. Yes, with interest rates on the rise and probably going to continue to be on the rise for the next probably through the rest of the year, maybe even beyond that, based on what the Fed has indicated they are going to do, we will see demand drop a little bit because buyers will no longer be able to afford to move, and people will decide to stay put because they're at an interest rate that was like 2%, and now interest rates are going to be like 5%. And they're like, well, why would I move unless I have a really good reason to get a 5% interest rate compared to the 2% I have now? So I do still think prices are going to rise because we just don't have the supply versus the demand, even though demand is going to drop a little bit. When we're talking about, like I said, the 35%, we had 5% this time last year. So that's really in line. Now, yes, that's half, which gets us around that 17 marker, but I don't think we'll be at 17% by the end of the year. We definitely could, but I think we're going to be between 10 and 15%. So likely this right in between these two numbers is where we're going to end the year. That's enough of that. Let's talk about what's going on per price point and overall. Average days on market is 15 days for Ada County. That is holding pretty steady. We are up a little bit, but not by much. When we were going into the pandemic and during the pandemic, we were in the 20s for the average days on market. So prior to the pandemic in a hot market, we had like 26 days average on the market. So this is still significantly under that. So no craziness there. When we're looking at the absorption rate, we have half a month supply on average based on all the price points. Now, if you remember, less than 4 months supply means that it's a seller's market. In between 4 months and 6 months means that it's a balanced market. And then anything beyond 6 months is considered to be a buyer's market. Because if it's taking, it's longer than 6 months for homes to sell, obviously buyers have a lot more choices and a lot more negotiating power than homes that sell on average in just 2 weeks. As you can see, based on the price point though, the average days on market is 12 days for anything under 400,000. And then we get up a little bit more when you're under 500,000. And then the first time you're beyond 2 weeks is when you're above 500,000, which absolutely makes sense for our area. If you have any questions about that, please let me know. I'm happy to explain more about what's going on there. So we have 327 active listings in Ada County, 628 pending, and we have just under 8,200 sold in the last 12 months. So that's incredible. The 8,200 is holding very steady. We still have a lot of sales happening, and the bulk of the sales, as you can see, are between that 400 and 500,000, which again makes sense for our jobs in our area and just being in the market rather than just looking at the numbers, but working with buyers and sellers and actually seeing the activity. Anything in that under 500,000 is still moving very quickly and is very competitive still. I'm not saying that things aren't still competitive above that, because they definitely are, depending on the home condition and location and all of those things. One of the indicators to see whether or not prices are likely to rise is, again, looking at the average prices down here. So the average sold price, as we know, $588,000. Well, the average price of homes that are pending, that say pending in our multiple listing service, is just under $650,000. So you can see they're getting $588,000, pending at $650,000. We don't know if that's actually what the contract is selling for, but because that's more than $50,000 above where we're selling at, it's likely that prices are still have an upward pressure there. And then when you look at all of the active listings and average amount, the average asking price is $825,000 for Ada County. So I like to look at this and say the $825,000 is what sellers are hoping for, the $650,000 is maybe what they're getting, and then the $588,000 is what they've sold for in the last 12 months. So again, upward pressure on prices there. Now let's talk about the top 3 areas for Ada County. Kind of no surprise, Southwest Meridian has grown by almost 7% so far this year. That's incredible. We have $690,000 for the average sales price in Southwest Meridian. Part of the reason I say there's no surprise there is because that area specifically has had a lot of room for growth, and all of the new construction that's been happening out there, that's still happening out there. We have a lot more people that bought a home a couple years ago that was brand new that are now moving into other areas and selling those. And then North Boise, almost always on the top of the list or somewhere close to that, up 4.7% so far this year, just under $800,000 for the average sales price in North Boise. And then right behind that, we have the Bench, up 4.1% so far this year, just under 460. And that again also makes sense because the Bench has been a lower priced area just in general for Boise, if you're in Boise proper. And so it has a lot of room to grow still because that 460 is still significantly below the average sales price for the county of 588. So that's really what's going on in Ada County. Still hyper competitive. Prices are still on the rise. They're likely going to continue to rise for the foreseeable future, just not at a significant pace. But we will see prices still rise. Now, I'm not saying they're rising by, things are going to be selling for $100,000 over asking. It's possible that prices are for sold prices, that you get homes under contract for less than asking, depending on the home and how we're competing and things like that. But overall, prices are not going to be coming down anytime soon, not in any significant way. Maybe we plateau a little bit. That's really what I expect, but not coming down. Now with Canyon County, we've actually seen even more growth. Let's talk about Canyon County. Again, we'll start with the market trends chart, then go into the average sold price, and then go into the breakdown for the different price points in Canyon County. When we're looking at the market trends chart, we have 139 active listings on the market, which is more than what we had in February, and it's a bigger delta than what we saw in Ada County, but it's still not very much. It's more than what we had last year with only 99 active listings in March, or at least going into April. And then we had 245 though on the market during the pandemic, right when we were about to shut down. So still undersupplied for what we said was low supply going into the pandemic. And then we peaked last year again in September with 407 active listings. So we're still well below where we were with our highest inventory of 407, which again is low for Canyon County just in general. Now, when we're looking at the number of pendings and solds, we have 325 pending, 315 closed in the month of March, which is up both categories for what we had going on in March of 2021. And then it's more sales than what we had in March 2020, but a little bit fewer pending, that 362 compared to the 325. Again, we have 325 pending compared to 140 basically active. That's more than double, similar to Ada County, showing that we have way more demand than what we have available still. And so that will put an upward pressure on prices. Talking about prices, we're up 3.8% so far this year. That is very close to what we saw this time last year, though I don't think we're going to see another 35% increase. That would be ludicrous. I do think for Canyon County, we're likely to see the average sales price increase by 15% or more. If you'll recall, Ada County, I said between 10 and 15%. Canyon County, I think, is going to surpass that, mostly because average sales prices in Canyon County compared to Ada County have a lot more room to grow. Average sales price in Canyon County right now, $417. We started the year with $402, and now we're at $417. Prior to the pandemic, or actually at the end of the pandemic, we were just under $300. Prior to the pandemic, we were at $250 for Canyon County. So a lot of growth there. We're still likely to see the growth continue. And I do think that this will cool down. It won't be 35%, but I do think we're going to see around at least 15% for Canyon County, just because there's more room to grow there. When we're talking about what happened this time last year, this is very close to what we saw. And like I was saying, with Ada County, I think we'll be between what we saw in 2019 to 2020, which again is why I said I think we're going to see at least 15% to 20% in Canyon County for the average sales price growth. When we're talking about just the absorption rate and based on all of the different price points, Average days on market for everything selling in Canyon County is 15 days, which is the same as Ada County, still 2 weeks, basically. And when you're looking at the absorption rate, anything less than 4 months is considered to be a seller's market. Anything between 4 and 6 months is considered balanced. Beyond 6 months is considered to be a buyer's market because buyers have more choices. So we overall, on average, have less than half a month, so slightly less or higher absorption rate for Canyon County than what we have in Ada County, but it's less than 1 month, all the way up to 800,000. As you can see, the price point that's selling the most is between 350 and 500,000, where we have 2,000 sold in the last 12 months. And then average days on market, as you can see over here on this line, we have officially over 2 weeks in the above 400,000 mark, but barely. And then everything below 400,000 is below 2 weeks or less for that, except for this one active, one pending, and 46 sold in the last 12 months for the 150 to 200,000. When we're looking at, where prices are going, no one has an exact crystal ball, but this, again, is one of the things that I like to look at to see. And we have an average sales price, as you know, $417, which is based off of just under 3,800 closed sales in the last 12 months. And out of the 325 pending, the average pending right now in our multiple listing service is saying that it's $450. Now, that's not necessarily exactly what things are pending for. That is not a field that is in our multiple listing service. It doesn't show the pending price. It's just this is the asking price that it was prior to the home going pending. Some of them will show exactly what it went pending for, but not all of them. So it's likely going to be a little bit less than this amount, maybe even a little bit more once they actually officially close. But the gap between what's pending and what closed is there, pretty significant. But we have an even greater increase in the average asking price for the 139 available listings. So 600,000 is the average asking price if you took everything that's on the market in Canyon County and put it together. So I like to see this as, this is what sellers are hoping for, this is approximately what they're getting, and then this is ultimately what they're selling for right now. So between the 600,000 and the 417, still quite a significant delta. I think, like I said, we're going to be closer to that 450 number here by the end of the year, probably, for Canyon County. Now, when you're talking about the top 3 areas of growth, Wilder, again, coming in first for this month, 7.6% increase year to date, average asking price, or sell price, of $415,000. Greenleaf just behind that with 4.8% increase so far year to date, and average sold price being just under $450,000, and then Middleton right below them at 4.4% increase so far year to date, and the average sales price being $517,000, $198,000. So that's what's going on in Canyon County. Very similar to Ada County. We don't have enough active listings. We have more than double pending than what we have available on the market, showing a huge amount of demand compared to supply. And then when you're looking at the actual sales are up as well, and they will likely continue through the year. So prices in Canyon County will not be coming down by the end of the year. I am going into interest rates next, and interest rates will affect demand, but I don't think we'll lose enough demand to see prices actually come down in any significant way. So talking about interest rates, they have increased by 1.5% in the last 3 months. That is the highest increase we have seen in interest rates in the shortest amount of time since 1994. Yeah. So the average interest rate right now for a 30-year fixed, according to Freddie Mac, is 4.72. So just under 4.75%. So we're just below 5% going into April, and that's not showing signs of slowing down. In fact, the Fed has said they're still going to be raising the Fed rate several more times this year to combat inflation, and banks will pass that on to the consumer as well with rising rates there. Now, where we're seeing interest rates hover around that 5%, we are already seeing a slight decrease in demand because people either are choosing not to move or can no longer afford to move based on their specific situation, especially in those lower price points when people are already shopping at the top of their budget in a lot of cases. So this 1.5% increase that we've seen over the last 3 months means that buyers right now, same house, same sold price, are paying about 20% more per month in their mortgage payment. So I talked about that in 2021, saying, rates are going to be increasing and what that means for you and how that works. I broke that all down. And here we're seeing that where people are paying more now for a more expensive home and higher because of the higher interest rate, because prices have come up and interest rates have come up. Now, I do think as interest rates rise, that will damper demand even more. And as demand comes down and supply comes up, hopefully, we will start to see the market cool off a little bit more. It's already cooling a little bit. And it is shifting out there. The market is always shifting. And we are not headed for prices crashing the way that people are hoping that it will. Prices might come down a little bit because we'll maybe start to plateau as interest rates go up and buyers get out of the marketplace. But we're not likely to see prices come down in any significant way like we might want them to, myself included. We are not going to see homes for sale for $250,000 in Ada County anymore. That's just not going to happen. You might see that if it's land only, and you might see that if there's a shack on it, basically, that needs to be torn down. But very, very low likelihood of that even happening, even in under those circumstances. The 200,000s in Boise are done. When you're looking at prices potentially coming down, you might see homes in the 350s again, rather than the 400,000 and up. But that, again, would mean that we need prices to absolutely plummet. We would need to lose all of the equity that we've gained, and that means the stock market is crashing and we're going into a full-on extended recession period, which I don't see happening anytime soon. We are likely to see, a recession in the overall economy coming up because of rising interest rates and because of inflation and a lot of other factors, and with the war in Ukraine and all of that. And yes, that will affect housing as well. And it won't have the impact, I don't think, that people are saying it will, because prices, again, are likely not going to come down in any significant way anytime soon, at least not by the end of the year. We are still going to see prices rise through the end of the year. Now, if we're in the market, you're thinking about moving this spring, which is almost over. We have 2 months left of spring and then it's summer. But if you're thinking about moving this spring or summer, it might even be time to start getting ducks in a row if you're moving this fall. But now is the time to meet with your trusted real estate person to talk about your situation and figure out if now's a good time for you. A typical closing time frame is about 30 days. That's still true in our market from acceptance. So you're in escrow, you're pending once you find a home, or if you're selling a home, once you find a buyer and get an accepted contract, you have about 30 days before closing happens. That's just kind of typically what we're seeing. So you have to kind of plan for that as well. And so if you have a home to sell in the near future, especially if you have some minor preparations, maybe you want to paint a little bit, fix up a couple of small handyman items, things like that, which I actually help with. My team goes through and we can coordinate bids for everything and actually oversee and manage all of the things that it takes to get your home looking shiny and new and ready to go to market. So people want to fight for it even more than they would have to already, because it just stands out compared to everyone else's. Now is really the time, especially if you want to get your house on in April. We have people that are ready to go tomorrow, right? We can list a home within a week, and we have homes that maybe need a little bit of work. So a lot of my clients, for the selling side, we meet significantly before when we actually go on the market, just because we're managing either life or repairs or, just getting things ready to go. And that usually takes, at least a month to get bids and coordinate everybody, because contractors are busy. But we can get your house on the market tomorrow if we need to, if that's what your situation is. And most people that I meet with, we aren't listing your house, next week. It's maybe a month or two out. So now is a good time to meet with a real estate person that you trust if you're wanting to move still this spring or this coming summer. That's really a wrap on market dynamics. My number, 208-914-1095. That is my cell, so feel free to text me as well if that's easier than a phone call. You can also check out my website where it goes over my numbers. Check out our company's listings. Keller Williams has some great listings out there, and you can always email me your questions as well. I'm happy to answer any questions you have, and I'm here to just be a resource for you. So feel free to reach out anytime. Okay, so that's what we have going on in the housing market. As I just mentioned, if you're thinking about buying or selling right now, it very much depends on your specific situation. I'm here to just give you the information that I have. Feel free to sit down with a real estate professional that you trust. I'd love to be interviewed as well. I'm always honored just to sit down with one of our complimentary consultations to talk about what that might look like for you. I'm never here to pressure you into moving if it's not the right decision for you, or ever to pressure you in general. I'm just here to give you the information that I have so that you can make a decision that works for you and your family. Now, blanket statements I don't love, but by and large, if you're a buyer right now, sooner than later is likely going to serve you. If you're a seller, depending on if you're turning around and buying or not, sooner than later, again, is likely going to serve you. Right now, we don't have very many homes on the market. So as a seller, you have less homes that you're competing with. So you'll likely have more buyers, more opportunity for competing right now. And if you turn around and buy a property, you get to buy a house while prices aren't continuing to rise, but most importantly, you get a lower interest rate. And for buyers, just strictly buyers, you'll get a lower interest rate. And because prices are going to continue to rise through the end of the year, very, very likely you are going to have a home at less of a price and then a lower interest rate, which is huge. Buyers lost about 20% in, I would say, purchasing power, but they're paying 20% more on average for your mortgage payment now for the exact same price that what we saw a year ago, strictly because of interest rates. So because of that, especially if you're in maybe the first time buyer pool, the lower price points, the starter home category, sooner than later is likely going to serve you. Now, that won't work for everybody. It depends on your situation, like I said. But by and large, if I'm going to give you general advice, general blanket statement, sooner than later is likely going to serve you. Now, one of the things that I hear all the time and have been hearing for years is, well, I don't want to buy at the top of the market. And yes, it might be the top of the market right now. Nobody knows. Nobody has a crystal ball. We don't know what the top of the market is until it's already happened. We don't know what the bottom of the market is until it's already happened. So when it comes to that, what's important about it is there's never a bad time to buy, in my opinion. There may be a bad time to sell. So you can buy at any price, but we know real estate over the long term appreciates. So even people that bought in 2006 and then the housing market crashed and bottomed out in 2011 and then we started recovering, if you held on to your property, you paid at the top of the market in 2006 and then you didn't sell, and then you sold in the last couple of years, you made bunch of money on that because you had way more equity than what you had, even though you bought at the top of the market. It's same is happening right now. As long as you don't have to move during prices coming down, if they even come down significantly in our area, because that's not very likely, at least not soon, then you're fine. As long as you're going to keep your job, able to make your mortgage payment, and you don't have to move, then you're fine. But over time, you're going to end up okay, at least at a wash. So that's why I say there's never a bad time to buy. There might be a bad time to sell because if you have to move, say you buy and it is the top of the market, this is completely hypothetical. You're buying at the top of the market and in 2 years, the market has come down a little bit. And you have to sell at that time, yeah, you're going to lose a little bit of money. But the rate of depreciation in the average sales price is likely going to be very minimal, even over the next couple of years, by and large, what we're seeing for our area, because like I said, we need significantly more inventory on the market and we need way less demand in order for prices to start really softening. Now, I do anticipate prices won't be doing this. They will start to plateau, if not come down a little bit, but we're not going to see $250,000 houses in Ada County anymore. We're likely not going to see anything realistically under 300, probably not even under 350. Our average sales price in Ada County is 590, basically. Even if we lost 50% of that, we're at 300,000. And it's unrealistic to think that we're going to lose 50% of that because even with what happened in 2008, we only lost 45% over the 2006, 2011, over the 6-year span. 45%. So even if that happens again over probably another 6-year span, if not, and that's just if things are as bad as they were then, which is very unlikely. Now, when you're talking about the national economy and what's going on, like in the stock markets and things like that, we are likely headed for a recession. And we saw a recession back in 2020, and we got right back out of that fairly quickly. It's possible that we see that again. It's possible that the recession lasts a little bit longer. But the reason that people are predicting a recession, it's not necessarily going to come true, but that is the prediction right now based on some top reports that we're reading, is because the Fed is going to continue to raise the rate. And as the Fed raises the rate to combat inflation, that if they raise it too aggressively, too much, too fast, it could cause demand and purchasing power and everything to go away much more rapidly than what is good. So the Fed is kind of stuck, between a rock and a hard place on trying to combat inflation. But because they're likely going to continue to raise rates as they've indicated, the reports that I'm reading right now are saying that we're headed for an economy recession by 2023, or in 2023 rather. Now that may trickle into housing, of course, but it's not a housing recession. It's an economy stock market recession, likely, if that even comes to pass. So how that trickles into housing is, people will have less purchasing power. So prices may soften, but they're very unlikely to crash. So prices coming down, yes, possibly. But again, that might be in a couple of years. Not going to happen this year. We're going to see prices continue to rise. How much they rise, that just depends on really what happens, and no one has a crystal ball. But supply versus demand, we still have way more demand than we have supply, and that on a bare minimum shows that prices are going to rise. That's just normal market activity. So until we have way more supply than we have demand, prices aren't going to come down. And I just don't see that happening for our area in a significant way anytime soon. Now, I want to emphasize in a significant way. That might happen that's why I say prices are likely to plateau, like our average sales prices and stuff. That's what I've been talking about forever, is eventually we'll get to a point where we kind of plateau off. It's very unlikely that we'll get to a point where prices come down we lose 20% a year. That's very, very unlikely. We gained 35% last year, which is crazy. Say we lose 10% next year. Well, we're likely going to be up at least 10% for Ada County this year, more than that for Canyon County. So it's a wash in a year from now. So do you see? I don't know if that really makes sense. I'm probably confusing a lot of you, so I apologize. This is why I say it's a very individual choice, and you have to really just look at what's going on out there and how that fits into you and your situation. Because if you want to buy now and you know you're going to move in a year, maybe it's not a good time to buy. Maybe it is, because nobody knows for sure. Definitely, if you bought last year and you need to sell this year, you're likely making a profit because of how much prices have come up in just over the last couple of years even. So maybe you bought in 2020 or 2019 and you're thinking about moving. Now might be a great time because you bought a starter home. Maybe you can move into something bigger, and you've already been in your home for 2 years. If it was your primary residence and you're buying another primary residence, you might be able to avoid capital gains taxes on the profits that you make, depending on what your situation is with that. And that's something that could be very helpful and beneficial for you as well. Now I'm starting to get kind of in the weeds with that. If you want me to cover more about what I mean when I'm talking about the recession in the economy and how that affects the housing market segment of the economy, let me know. You can comment below, or of course send me an email or shoot me a message somehow. I am happy to answer any and all questions that you have. I hope that this did make sense, because there's never a bad time to buy, maybe a bad time to sell, depending on what the market is doing. But really what it comes down to is what's right for you and your family and your specific goals and wants and needs and all of that. So sit down, have a consultation with a real estate professional that you trust. Again, we'd love to be interviewed for that as well. And if you have any questions about what's going on in the market, or you want me to send any of this data, I have full reports that I'm happy to send any one of you. Just let me know. But I don't want to inundate you with way too much information like I feel like I have, unless you ask for it. So just let me know. And I hope everyone has a great weekend. We will see you next week for just our regular week-over-week update going into what's going on in Ada County. All right, take care.